people have been joining. Thank you everyone for joining us this afternoon. We are going to be presenting on the employee retention credit directed towards how credit unions can apply, as well as how your small business members may be eligible to take advantage of this credit. I am joined today by Chris Zingale. He's a partner at Janover, and he's been leading Janover's COVID-19 relief team since the start of the pandemic and is specializing in the ERC credit. Today, we are going to walk you through how you can qualify as a credit union, as well as how your members might be eligible to take advantage as well. We thank you for joining through CUNA today, and we hope to be able to present this to you and find some of you to be eligible. We will be finishing off with ways that you can market this out and ways that you can reach back out to us to obtain this credit and determine your eligibility. And like I said, I am joined by Chris Zingale. I will give him the opportunity to introduce himself as well. I am from Newtek, your business solutions company, and we are partnered with CUNA Strategic Services to present this to you today.
All right, thank you very much, Samantha. I appreciate the introduction. Let's go to the next slide, please. The first slide, rather. Can we please go to the first slide? There we go. All right, so like I said, Samantha, thank you for the introduction. Thank you for having me here today. My name is Chris Zingale. I'm a partner at a local New York-based CPA firm called Janover LLC. I head up our firm's consulting department. As part of our consulting services, about 2 years ago, our team decided to launch our employee retention credit services. So for about 2 years now, we've had a specialty team that has been focusing on the ERC, which has turned out to be a really beneficial program for many of our clients and businesses alike. On the agenda for today, I'll tell you a little bit about our firm, Janover. We'll go through a little bit about what exactly the ERC is, the employee retention credit, a short timeline of COVID relief and kind of how we got here today, and the reason why many of you on this call may have not even heard about the employee retention credit. We'll go through how a business qualifies. We'll go through some representative examples, how it interacts with PPP, and then we'll have a short section at the end about how we as in Janover and Newtek can help you claim the credit. Next slide, please. We're having some technical difficulties here.
Chris, I think there just might be a delay on the slide change to the live event, but it is on slide 4 for you.
We're on slide 4. Okay. I'm still seeing slide 3 on my end. I'm not sure if everyone else is seeing the same thing. Okay, where's the slide 4? So a little bit about Janover. Like I said, we're a New York-based CPA firm. We're about 150 team members, about 20 partners. We were established back in 1938, so we've been around for a little over 80 years. We have clients in almost all 50 states, and we serve over 16 industries. Next slide, please.
Chris, I'm not sure if the delay is on your end, but as your next slide, the slides are going. So sorry about for some technical difficulties, but we will be sending around the deck afterwards as well. So if you are also being on a little bit of a delay, you will get the full package at the end.
Okay, great. So As I say next slide, I'll just assume we're on the next slide, and we'll just work through the technical difficulties here. A short slide about some of our service offerings. We're a tax and compliant auditing CPA firm. We have a large advisory and consulting practice, again, which is where our ERC services have been running out of. Next slide, please. This just shows some of our firm's awards. We're a top 200 firm in the country. Our marketing department loves this slide, so we include it in all of our decks, but we are going to move on to the fun stuff, talk about the employee retention credit on the next slide, please. So what exactly is the employee retention credit, right? The employee retention credit is a refundable payroll tax credit that was created under the CARES Act, which was originally designed to be a way to encourage businesses to maintain their staff during the pandemic. The ERC provides eligible employers, or businesses rather, cash refunds of up to $26,000 per employee for any wages that were paid between March 13th of 2020 through September 30th of 2021. Key factor here is that a business must have W-2 employees in order to qualify for the credit. Big piece here is, again, this is a refundable payroll tax credit. It's not a forgivable loan similar to the PPP. It's not a grant. It's not a loan. It's an actual fully refundable payroll tax credit, meaning that it's actually a way to get cash in your pocket. Next slide, please. So how did we get here, and why is the ERC this program that really has flown under the radar for so long? So when we go back to the original CARES Act that was passed in March of 2020, that was the same act that essentially provided PPP, that first PPP draw. In that original legislation, the ERC did exist. It was a program that existed all the way back to early 2020. At the time when the CARES Act was passed, a business really had to choose to take PPP or ERC. A business could not do both. It was really an either or. So because of the success behind the PPP and all the fame that it got when it was first passed, pretty much all businesses in the country chose to take PPP rather than the ERC. So it really flew under the radar and did not get much fanfare. Fast forward to the end of 2020, to December 27th of 2020 to be exact. The Consolidated Appropriations Act of 2021 was passed. This was the same act that added that PPP second draw. But the biggest piece of what happened here is that Congress went back and made retroactive changes to the original rules of the ERC and PPP, and now allowed businesses who did receive a PPP loan, number one, to go back retroactively and claim the ERC as well if they were eligible for 2020. But then this act also extended the ERC, the Employee Retention Credit, through June 30th of 2021. Basically extended it an extra 6 months. Fast forward again to March of 2021, when the American Rescue Plan Act was passed. In that act, they actually extended the ERC through the fourth quarter of 2021, adding another 6 months to it. And then at the end here, the last piece, when the infrastructure bill was passed at the end of 2021, mid Q4, mind you, that act actually eliminated the fourth quarter credit. So where we stand as of today, the ERC is eligible for employers or businesses rather who claim PPP money. And the credit goes from March of 2020 through the third quarter of 2021. Next slide, please. So at what point in the mix did credit unions actually become eligible for the ERC? This is something that, again, another thing that really has flown under the radar. Under the CARES Act, the original legislation of the CARES Act from March of 2020, again, the same act that had the first draw of PPP, as well as that 2020 Employee Retention Credit. Under the CARES Act, many of you probably already know, but credit union ERC eligibility was very much a gray area. Reason being is that Internal Revenue Code defines credit unions as instrumentalities of the government, And therefore, it was very gray on whether or not credit unions could actually qualify and claim the Employee Retention Credit. Fast forward to the Consolidated Appropriations Act in December of 2020, a specific provision in that act actually clarified specifically that credit unions and other 501c organizations would now be eligible for the 2021 credit. So where it was very gray ahead of time, I know there was a lot of discussion around it, and this was a topic that really came to the top across a lot of organizations, especially credit unions. They did specifically say that credit unions would be eligible for the 2021 credit. So that's the great news. Next slide, please. So what are we talking about here in terms of size of the credit, right? Like I said from the start, earlier on rather, total ERC eligibility is up to $26,000 per employee across a total of 4 periods. So how does that 26,000 break out? For 2020, there's really two credits. There's a 2020 credit and there's a 2021 credit. That 2020 credit is valued at up to $5,000 per employee for the year. So that's up to $5K per employee for any wages that were paid from March 13th through December 31st of 2020. So it covers really 3 quarters, and you're eligible to claim up to $5,000 per employee for those 3 quarters. For the 2021 credit, they significantly kind of upgraded that credit, thereby making businesses eligible, if they qualified for it, for up to $7,000 per employee per quarter for 2021, thereby making the 2021 credit valued at $21,000 in itself. So whereas the 2020 credit, we call it, it's not really an annual period, but we call it here an annual credit. The 2021 credit is really a quarterly credit. Next slide, please. So we're starting to get into the how do you qualify piece and how do businesses qualify. The first major qualification is certain full-time employee limits. So the ERC can only be claimed on what the IRS calls qualified wages. Those are really gross wages that are subject to FICA taxes, as well as certain healthcare expenses. Now, the definition of qualified wages largely differs for what the IRS defines as small versus a large employer. For a small employer, pretty much all wages are eligible. All wages are qualified for the ERC. For a large employer, there's not really much opportunity here. The only real wages that would qualify for ERC would be wages paid to employees who are not actually providing services to the company. So that would be if a large business furloughed a large number of employees during COVID, they could claim the credit on wages paid to the furloughed employees. But really, if you're not a small employer, if you're not defined as a small employer for ERC purposes, there's not too much opportunity to claim the credit. So how exactly does the IRS define a small employer? It differs, of course, for 2020 versus 2021. For the 2020 credit, the IRS defines a small employer as a business who averaged less than 100 full-time employees in 2019. That's specifically full-time employees. Part-time employees would not be included. And note that it is focused on 2019 full-time employees. So that would be based on pre-COVID levels. For the 2021 credit, just a reminder that the 2021 credit in terms of size of the credit is $21,000 versus $5,000 for 2020. So it's a much larger credit, plus the eligibility is much expanded. So for 2021, a business would have to have averaged less than 500 full-time employees in 2019. So they really lowered that bar in terms of how a business could qualify. Much larger businesses were now able to qualify for the credit, which really opened up the whole program to many more businesses across the country. Keynote at the bottom here is that any owners and their family members' wages would be excluded from the definition of qualified wages. But that really gets into the first step of qualification for the ERC, you have to really determine the number of full-time employees or how large the business is. Next step, please, or next slide, please, rather. Second, the main way to determine qualification, after you've determined your full-time employee limits, after you determine that you could even look at the credit, there are two key ways to qualify for the employee retention credit. And a business or a credit union or any other organization in the country would have to meet at least one of the two following eligibility requirements. So you don't need to meet both. You have to meet either or. You could meet both. You could meet one of these in 2020 and a different one in 2021. But the first way to qualify, which is more of a quantitative approach, right? There's a quantitative and a qualitative aspect of qualification here. The quantitative approach is that a business had to have experienced what the IRS defines as a significant decline in gross receipts in any calendar quarter of 2020 or 2021 compared to the same calendar quarter of 2019. So what is a significant decline in gross receipts? For 2020, a business would have had to experience a 50% or greater reduction in gross receipts or revenues in any quarter of 19 compared to the same any quarter of 2020 rather compared to the same quarter of 19. You have to hit it in one quarter. It's not an annual period, just one quarter. For the 2021 credit, a business would have had to experience a 20% decline in revenue quarter of 20 compared to the same quarter of 19. So as you step back and think about this, right, the 2020 credit, it's a 100 full-time employee limit, $1,000 per employee credit, and you need a 50% reduction to qualify for it. The 2021 credit, you only need a 20% reduction to qualify for it, so it's easier to qualify with the gross receipts reduction. The credit is $21,000 rather than $5,000, plus businesses, much larger businesses rather, are able to qualify for it. So when you really think about perspective of 2020 and 2021, the 21 credit is much more significant in the scheme of things. Second way to qualify for the credit is if a business experienced a full or partial closure due to a specific government order during 2020 or 2021. Now, government orders include state, local, federal government, CDC, OSHA, any number of federal orders that came down during COVID would potentially provide a business an opportunity to claim a partial suspension of operations. Now, this is a very gray area of qualification. We typically get the most questions on this when we do speak about these topics. So we're going to spend the next few slides talking about specifically the full or partial closure and what exactly that means, how the IRS defines it, and how you could kind of think about internally whether or not your credit union qualifies or whether one of your members qualifies. So let's go to the next slide, please, which starts to focus on the partial suspension of operations. So to be considered to have a partial suspension of operations, a business would have had to have had a more than nominal piece of their business suspended by a government order. Now, what is more than nominal? It has to be 10% of something of your business, 10% of the revenues of your business, 10% of the number of working hours of your business by all of your employees. Really, a piece of your business that is not insignificant had to have been suspended by a government order, which therefore affected the entire business as a whole. So rather than kind of talk in theory about this stuff, we find it really helpful to kind of go through specific examples, how the IRS defines a partial suspension and a more than nominal suspension. So if we go to the next slide, we'll go through a couple of examples specifically that the IRS talks about to help you kind of think about the suspension, help jog kind of some thoughts or memories, and kind of just think through different industries, whether it's your own credit union or whether it's some of your members' businesses, and different ways that they could qualify. So first example is really a restaurant, right? Restaurant, especially in New York, but really across the country. Restaurant, closes their indoor dining and they shift to takeout only. They're still operational. They may be, but they were forced to close their indoor dining. Under that restaurant, regardless of what happened with their revenues, they would qualify for a partial suspension of operations. Moving on, now let's say that restaurant was allowed to open outdoor dining only. They still couldn't open up indoor dining. Because that indoor dining facility is still forced to be closed by the government, that restaurant would still qualify for a partial suspension of operations. And then finally, even if indoor dining reopened, at least through the beginning of 2021, that restaurant had limited indoor capacity, thereby qualifying them for a partial suspension of operations. A retailer, if a retailer has an in-person presence, a brick and mortar presence, and an online presence, and that in-person store is closed by a government order, the fact that they have that retail location, the online location rather, that's still operational and may be doing very well, they would qualify for the suspension of operations. Medical, so medical facility, doctors, dentists, industries like that. There was a period of time where elective and non-urgent procedures were prevented by government orders, but they were still able to remain open for emergency only. Under that example as well, those businesses would qualify for a partial suspension of operations. Number 4 is a grocery store, but it could be any store. So let's say it's a grocery store. Grocery stores were considered essential, right, during COVID. Let's say they have a salad bar in that location. The salad bar was forced to close, but the grocery store wasn't. If that salad bar doesn't make up more than 10% of the total revenue of that grocery store, then the fact that the salad bar is closed would not make them eligible to claim the ERC under the partial suspension of operations, right? They very well may qualify with the revenue reduction, but not necessarily the partial suspension. A food processor, so a facility that is typically open 24 hours, now has to close for a few hours to provide some enhanced cleaning, which is required by the government, whether that's a food processor or a manufacturer, whatever that industry is. If they were forced to reduce some of the hours that they were able to remain open by the government, that would qualify as a suspension. And finally, a multi-location retailer. So if there are multiple branches in different states or different regions, if one member or if one branch or if one location is suspended because of a government order, then the entire business as a whole would qualify for the credit. Next slide, please. A few other examples here. A manufacturer. So the IRS does allow businesses to claim a suspension if one of their key suppliers is suspended due to government orders. Now, if the supplier of this manufacturer's materials was shut down because of compliance, and that manufacturer in turn was unable to procure certain materials to sell their goods or create their goods, they would qualify as a partial suspension of operations because their supplier was suspended. Likewise, let's say item number 2 here, let's say that manufacturer, their customers were forced to stay home and there was a lack of demand, so that manufacturer had to shut down or close their operations. That would not qualify, right? If it's a voluntary shutdown, if it wasn't something that was forced by the government and specifically related to COVID restrictions, that would not qualify as a partial suspension of operations. Finally, the third example here is remote work. If a business was required to close, but they were able to work remotely at comparable operations prior to COVID, so they were really, if they were able to shift the operations, work remotely at really not a limited capacity, because they were required to close and go remote, that doesn't necessarily give them a suspension of operations that meets the threshold that the IRS assigns in order to qualify for the ERC. At the bottom here, you see some thoughts with the credit unions. So credit, I believe, along with banks, were considered essential businesses during COVID. So I would recommend for each of you out there, if you're thinking about the suspension, well, first, right? See if you meet that revenue reduction in order to qualify for the credit. But if not, and you're thinking the suspension of operations, you're really going to have to look at the unique set of circumstances and facts that are specific to your location or the region that you're operating in. So it really depends. This is a very gray area, like I said, in terms of if you meet the threshold to qualify under the suspension. You do some research. People have very mixed feelings about this, specific for credit unions or banks. If a lobby or a branch was closed, you really have to think, was that ordered by the government or was it voluntary? Were your businesses closed for reduced hours to do enhanced cleaning protocols? Were those voluntary protocols or were those forced by the government? So as you think about the suspension of operations, you really have to look at the big picture, look at what was affected, how it was affected, and why it was affected. Was it affected voluntarily, just to be safe, or was it forced at the government, social distancing, for example? So a lobby had to be closed and only one person could come in at a time because of social distancing. And because of that, the employees in the branch were not able to see as many members and weren't able to serve as many members during a day, right? So it's gray, something to think about. It's not totally clear cut, so not everyone will qualify under a partial suspension, and it is something that you should really consider. Speak to your accountant, your advisor, your attorney, speak to people who could help you kind of think through this and see what makes the most sense for your business. Next slide, please. So not necessarily for each of the credit unions on this call, but more so for your members. When you think about partial suspension industries, these are just some of the quick ones that come to mind that we like to talk about, right? We went through some of those IRS examples, but it's sometimes easier to see them on a page like this. So when you think about the construction industry, if a construction job was shut down because that job was a non-essential job during a period of time, that could potentially qualify for a suspension. Restaurant and hospitality industry, right? Restaurants are pretty much the easiest type of business to classify as a suspended operations due to COVID because of those indoor dining restrictions. Law firms or any business who operates in a court of law. Courts were shut down in many states in the country, as you remember, in 2020, even into early parts of 2021. So if it's a business or a professional who operates primarily in courts, then they could potentially qualify for a suspension of operations because the courts were closed. Even if they shifted to Zoom, it's a different service, it's a limited service, there's not as much going on, so it could potentially qualify as a suspension of operations there. Schools or houses of worship, so for a very long period of time, churches and mosques, houses of worship were limited capacity, were closed, were suspended for a period of time. Manufacturing facilities, primarily due to social manufacturing was considered essential, but a lot of them did have to suspend or reduce the number of people they could actually have on site. Non-for-profits are another really popular one. So whether it's a non-for-profit that generates most of their revenue from large-scale gatherings and fundraisers, that could potentially qualify, right? So if every quarter there's a large gala that a non-for-profit holds, and that makes up most of their revenue for the year, and that gala is a 200 or 300 person event, because of the limitations of large-scale gatherings during COVID, depending on where that non-for-profit operates, that could potentially qualify for a suspension of operations as well. And then finally, medical and dental practices, like I said from that IRS example earlier, for a couple months at least, doctors, dentists could only see certain patients, emergency only. Dentists couldn't do cleaning for a period of time. So these are just some of those industries that as you're out there, whether it's talking to your members or your friends or your family, These are the things to kind of keep in mind when you're kind of thinking about the ERC, who will qualify, who may automatically qualify basically, and how you should kind of be thinking about the employee retention credit kind of moving forward. Next slide, please. So just a couple of other key points or key pieces of information here, which we didn't really cover throughout the presentation. The first is, how do you actually apply for the credit? That's a question that comes up a lot. So unlike the PPP process or other COVID relief processes, there isn't really a formal application process for the ERC. So there's not really a process where you submit a claim to the IRS, they review it, they come back with questions, they ask you for documentation and qualifications and so on and so forth. It's really just a matter of doing internal qualifications yourself or through an advisor or an accountant, determining how much you qualify for, and preparing an amended Form 941, a form which is also called the 941X. You apply for the credit through filing an amended 941X, you submit that to the IRS, and on to my next bullet here, it'll take anywhere from 4 to 12 months for that money to really be sent out from the IRS to a qualifying business. So the refunds, it's a very long time span, 4 to 12 months, I know, but we've seen, depending on the size of the credit, really determines how quick it's going to take to get that money. So credits that have been, in theory, below $250,000 per quarter, we've found those have been taking anywhere from 4 to 5 months to be sent out from the IRS to the business who qualified. And then you have certain credits in the 2, 3, 4, 5 million plus range that have been taking 9 to 12 months, maybe even longer to actually get those, to get the refunds from the government. Finally, key piece is that ERC refunds are taxable, so that's something that everyone should be thinking about. It's something that a lot of people fail to realize, but the money is taxable at the end of the day, so it's not like the PPP, which was really tax-free. This is essentially taxable income. Finally, another point here, which relates to qualifications as well. An affiliated group who are under have to essentially determine qualification and apply for the ERC as if it was a single business. So if you have, let's use an example, if a chain of restaurants or 10 restaurants are all under common ownership, those 10 restaurants essentially have to evaluate the ERC as if they were a single restaurant, as if they were a single employer. However, if one restaurant and not the other 9 were affected by COVID restrictions, then the entire group would qualify. Likewise, if you combine revenues of all 10 of those restaurants and they meet the revenue reduction qualifications, then all 10 restaurants would qualify for the credit, regardless of how each separate restaurant performed in 2019, 2020, and 2021. So just keep that in mind. You do have to look at affiliates. Refunds are taxable. They could take anywhere from 4 to 12 months. And to apply for it, you need to file an amended 941 return. Next slide, please. So I know we talked about the size of the credit, right? Credits could be up to $26,000 per employee. We just put this slide together just to put some perspective into the size of the credits or types of credits that we're seeing and we've been doing. So these are really 5 short examples of stuff that we've done in-house. As you can tell, it really, the higher the head count, the higher the credit. That's how it works. But whether you're a retailer with 500 plus employees who's going to qualify for over $5 million, or whether you're just like a local pizzeria or burger shop with 10, 20 employees, you're eligible for $150,000 to $200,000. Businesses all across the country are eligible for some significant refund money here. And like I said, because of the way that this program came about, it's changed so many times from March of 2020 even through today, there's updated guidance coming out all the time because of how the program evolved and how things changed. There are really not many businesses out there who even realize this credit exists. We are having multiple calls a week with business owners, most of who've never heard about the credit. Even if they ask around, they ask their friends, advisors, people don't know about it. We are seeing a lot more people applying for the credit now. We're seeing a lot of companies out selling these services and reaching out to businesses. So whether it's your credit union, whether it's a friend, a family member, a relative who owns a business, this is something you should be thinking about. You should be evaluating. It could be really impactful and really significant for a business owner. And it's something that could really help people out, especially in 2022, coming out of COVID and really trying to bounce back. This could be a really impactful credit. Next slide, please. Not very relevant for purposes of this conversation, but I think it should be mentioned. There is interaction with PPP loans for any businesses who receive PPP and are also going to be claiming ERC. The key piece is here that a business is unable to quote unquote double dip their wages. So if a business utilized wages to claim on PPP forgiveness, they can't also go ahead and take credit on those wages for ERC. As many of you probably know, PPP was a program specifically built around keeping people employed and providing small businesses money to pay their employees and continue to pay them through COVID. Likewise, ERC is a program that was meant for businesses to keep employees on payroll. So if you were given money for PPP that would be used to pay employees, you can't also take that same money and then go ahead and claim ERC on it. So not going to go through each of the bullets on this slide, but more so mention businesses who got PPP, just be careful in applying for ERC. You really have to be careful in that double dipping. Next slide, please, which kind of wraps up the session. The plan for this session was to go about 35 to 45 minutes and keep it open for questions at the end. We had a little bit of technical difficulties, so I can't necessarily see the questions myself, but I'm sure Samantha or one of the facilitators would come on to bring up any questions. But just to wrap things up from this end, how can Janover help? How can our firm help? So like I said, we're a firm, we've been around for 80 years. We're a CPA firm. We've been in the business for a very long time. We've been doing ERC since the program came about 2 years ago, and we've done over $250 million of credits for our existing clients, for new clients, and for businesses alike. So part of what we do is just help people strategically navigate the whole ERC process. We help determine whether or not a business can qualify for the credit. If so, then we calculate the credit, we prepare a supporting package, we prepare amended payroll tax returns, and we ensure that really we're giving you a full package, or we're giving a client a full package that they could go ahead and claim the ERC. They have a package that will be able to be audited by the IRS and really stays in lines with all the strict program guidelines, whether it relates to ERC or whether it relates to PPP. So that really wraps up the Janover piece. I'll take it to the last and final slide. And I think, Samantha, do you want to jump in here?
Yeah, so thank you, Chris, for that. That was very informative. So how NewTek can help you. We've been in business for 20 years. We are a publicly traded company on the NASDAQ under stock ticker NEWT. Aside from this, we are a solution provider to businesses of all sizes. We are partnered with a lot of different credit unions, some of which might be on the call today. And we look to assist both the credit union as well as the members from anywhere from business lending to payroll services, insurance, merchant services, tech, and web hosting. But we also like to do presentations such as this to bring awareness not only to the credit union, but to your members. As for the ERC process, NewTek will be your liaison between you as the credit union, any of your members, as well as through Janover, to make sure this process is handled smoothly, make sure that you have the necessary marketing, training support, including social media content. So if you want to market this out to your members and not just work on this for the credit union, we will provide you with materials to make email marketing, flyers, anything that you would want to post on social media to make sure that you have a full package to go out and make your members aware. And we will handle all of the work in communicating with them, making sure that they are eligible, speaking with them about the program. So between myself and Chris and his team, we would definitely be able to assist the credit union and any of your members. Here at NewTek, we do service more than 100,000 business accounts in all 50 states. We've been a partner in alliance with CUNA Strategic Services since 2003, and we are really happy that they were able to bring us this platform today to speak to all of you. We will, as I mentioned, be sending this around, both the deck as well as the recording. So if anybody had to jump off or anybody got in a little bit late, we'll be able to send this around. Additionally, we will be reaching out to see if you need any assistance applying for the credit or getting this information out to your members. The chat box is open, so if anybody does have any questions, so far the only one that came in was, would this be recorded, which is yes, and it will be sent around. If anybody has any questions, you can feel free to use the Q&A box. If for any reason you don't see the Q&A box, you can exit quickly and come back in, and usually that will make it pop up if you're not seeing it. But we'll leave it open for a minute and see if anybody has any other questions.
Thanks, Samantha.
So it looks like a question did come through. Chris, it's saying, what does it cost for the business to apply?
So what does it cost to apply? If to come through Janover, we price based on a per employee fee. So we as a CPA firm don't charge contingent fees in order to claim the credit like many tax credit companies. We price it based on a flat per employee fee. So if you're interested in discussing further, I'd urge you to reach out. We're happy to have a conversation to talk through each specific situation and pricing, but again, we price it based on the number of employees in the business rather than a percentage of the credit.
Perfect. I'll also leave it open for a minute. So far, that's the only question. But if anybody does have any other questions, feel free to put in the chat. As mentioned, we will be reaching out to you individually as well. So if questions do come up, you can feel free to reach back out to us. And whether myself or Chris will be able to answer those for you and get you started on the journey towards ERC if you have not taken it already. As well as assist with any information you would want to get out to any of your members. So I'll leave it open for another 2 minutes, see if any questions come in. If not, thank you all for joining us today. We really appreciate this. Thank you, CUNA Strategic Services, for giving us this platform. We hope to bring more webinars to you guys about upcoming changes, anything further with COVID-19 relief, to make sure that you're in the know of anything that would be valuable, again, for the credit union or for any members that you guys have in the business atmosphere. I'm not seeing any more questions coming in. Okay. So thank you, Chris, and as well, thank you everybody who joins. Like I said, you will be receiving an email with a copy of the deck and the recording. So please keep an eye out for that. It will go to the email that you registered with, and we will be in contact with you shortly as well, just to get your input, see if you're interested in exploring this or if you have any other questions. Chris, before we go, anything else?
No, I really appreciate the time everyone took today to join. Thank you, NewTek and CUNA, for setting this up, and I look forward to hopefully meeting or speaking with many of you on this call in the future.
Perfect. Well, like I said, thank you everyone for joining. I hope you have a great rest of your afternoon. Oh, wait, somebody just asked a question. If a credit union chose to close their lobbies and go to drive-through only, but they weren't required to, would they still be eligible?
Theoretically, if there was a voluntary suspension, that would not necessarily meet that government order threshold. Sometimes you'd be surprised, though. There may be government orders that do coincide with what you chose to voluntarily do. You may have not been forced to actually do it yourself. So I would urge you to still kind of look at the ERC, still kind of look at that suspension of operations, look at what government orders at that time, even though you were able to stay open. and there may be an opportunity. You never know. So I wouldn't just write it off right away. I would definitely take the time to look at it and analyze it a bit further.
Thanks, Chris. And yeah, we encourage you to come forward. I know most of these questions are coming in anonymous, but when we do reach out, we encourage you to reach back out to us. We're here to help you as well to determine the eligibility based on any choices you made in closures, as well as look into state regulations. So we're here for you as well to assist with some of that research. So please do not hesitate to reach out if you're not sure if you're eligible. It's worth exploring versus just, going with that you're not. We've had clients who've done that in the past, and they actually found out that they were able to take advantage. So we want to make sure that you're checking every box and determining the eligibility. It doesn't look like there's any other questions, but every time I say that, there seems to be another one, but so far none. So we will wrap this up. We are getting close to our time anyway. And again, thank you all for joining, and we will be following up with you shortly. So have a great rest of your day.
Thanks, everyone. Thanks, Samantha.
Thanks, Chris.